Hey, welcome back just after 3 p.m. Eastern Time on December 9th, the day before the Fed this week. Little talking point, lag 7 versus the S&P 493. Pulled some charts from Opening Bell Daily with Phil Rosen. Not too bad here. Most of the Magnificent 7 are lagging the S&P 500 in 2025. You wouldn't think that because it felt like we were being led by the Mag 7 back to the promised land after the April correction. But it turns out that Google and Nvidia are the only two Mag 7 companies that are leading the S&P, which is up around 16-70% year to date. So Microsoft just underneath, even though we hit all-time highs, we faded. Tesla, one of the ugliest drawdowns we've seen this entire year, was like down 50 plus percent. Apple was down with, I'm pretty sure it was like a nasty Q1, and then it was like, oh, Apple's going to be behind AI, and they're not talking about AI, and all of a sudden they ripped to all-time highs. Meta also had a pretty nasty pullback down over 30%. Amazon just recently had a pretty nasty pullback down about 15-20%. So, I mean, I think this is a sign of good things. I mean, this is a sign of a healthy rotation. It's not going to be pretty. I mean, obviously these companies are so large. I mean, it's 30+% of the S&P market cap is in Mag 7. So I'm hoping that the markets can be able to rotate without really cratering the market to the downside and causing like a 5, 10, 50% correction first before we kind of broaden out and start to see where maybe the next 1 to 5 years it's no longer coin Mag 7. If you remember, it used to be called FANG stocks. Then it was FANG man stocks. Now it's Mag 7. The grade 8, the whatever. They'll come up with some silly acronym. It'll be a top 5 or top 10. It'll be another way to talk about how concentrated the market is. But right now, Mag 7 for the year, only Nvidia and Google have outperformed the S&P, which I thought was interesting. Now, it could get, we could have another run into the end of the year, possibly Microsoft, Tesla, Apple, do outperform, and all of a sudden we shift this over. Let's see if we can, shift the S&P. If you can find my mouse here, S&P shifts over, and all of a sudden it's like, Amazon, Meta are underperforming the S&P, but then 5 of the 7 are outperforming the S&P. Who knows? But time will tell. Okay, what's next? Hidden volatility behind the Mag 7. If you look at this, zooming in, we've had some pretty ugly drawdowns. Tesla and Meta both have had some really nasty drawdowns. That was the max drawdowns back in 2022. I remember because it was a really crazy surprise. The healthy companies like Meta, like Amazon. I mean, Amazon was down 52%. Google was down 44%. Meta was down 74%. And these all proceeded to go to all-time highs. Max drawdown in 2025, we had nearly a 50% pullback in Tesla, 37% in Nvidia, 34% in Meta, 30% nearly in Google, but it's up to all-time highs. Amazon, 31% pullbacks, 31% to Apple. That primarily came from the February, March, April rotation, as well as Liberation Day. Okay, I've got one more slide for you here. Sector performance. This is S&P year to date. So we are looking at drawdowns compared to year to date returns. Communication services up 36% year to date return. Tech up 26% year to date return, with drawdowns 22+%, 26%. Right? I mean, there is no such thing as a straight up market. There's going to be risk in these markets. So it just shows, like, yes, a 20+% pullback, a 20+% correction, where the market finds a bottom and rips back up. That's where a lot of money is made. This is why I keep talking about how important it is to have some dry powder, because when you look left on a chart, when the market is in a drawdown 10, 15, 20%, you might be taking back, years and years of gains all in one nasty bear market. And it may not even be qualified as a bear market or categorized as a bear market, but it might just offer really good discounts. And again, if this is a company that you're interested in owning, if this is a stock you're interested in owning, if this is an index you're interested in owning, then participate. You don't have to throw all your money at it. You don't have to be invested all the time, but having some cash at the ready and seeing the market offer some pretty decent discounts is a pretty good way to trade, and typically outperform the typical benchmark, because this right here with drawdowns and returns. If I draw this out, let me see if I can just use a box here. Let's go a little box. Let's change the color to blue. I'll match this blue right here. So the S&P typically is up around 8% per year. Okay. And the typical drawdown, I'll put this in blue. So let's go typical drawdown is around 15%. Something like that. Let's see if I can line that up. Close enough. And let's fill that with this color here. There. Right? So your S&P, so the typical S&P is an 8 to 9 to 10% gain on the upside. And this again averages, but 8 to 10% gain to the upside with a 12 to 15% pullback to the downside. So there's more volatility in individual stocks versus an index. Obviously, some stocks and sectors and individual stocks will outperform like crazy. I mean, we've had stocks this year that from the April bottoms to the recent all time highs or the rips back up to all time highs were triple digit gains. And this happened across the board on a lot of stocks. Anything AI did pretty well. Quantum computing had some good times. Nuclear stuff did well. Silver crushing it this year. Silver's up over 100% year to date. Wild and crazy stuff. Okay. So again, just thought it was interesting. Just pointing out kind of where we're at. I think that the rotation away from Mag 7 is pretty healthy. A couple things to look at. I do have a couple trades I'm watching here till the close. Right now, I've got an iron fly up about $60 while the other one's down about 30. This could be getting pretty interesting here in the next, the next 15 to 30 minutes. If this is offering a bigger profit, I might just grab a chunk. Let me see if I can get an analysis tool here. Will it show it? Yes, it will. So there's my profit. Oops, there it was. There's my potential profit trap on the trade hanging out around that 45 handle. So we're getting closer. I mean, maybe to be safe and not throw money away, I might just take a small profit now. Up 60, down 25. This one's only risking a max of 40. This one potentially pays out $400. So I'll see if I can carve out a little winner. So my pin price is 45 and 65. More than likely, the 45 is probably the one that I have a chance at. So net, I'm risking $95 to potentially make $400 and some dollars on one of these winners. So if we can get closer to 45 near the close, I'll hang out into this maybe 15 to 30 minutes and see where this thing's at. If it's over $100, I'll probably just take it. All right. Let's see here. Insane moves on SLV. Good to do a collar on it, Mike. Yeah, let me take a look at it. Thanks, Don. Appreciate that. Nice to see everybody. And sorry, the final hours haven't been nearly as consistent. My afternoon started to get filled up with a lot of extra meetings and extra contents and doing more videos and stuff and putting them all over the place. So it has not been easy to just jump on every single day like I typically do for a final hour. So, if I'm not live every single day, there will be several videos through the week. I post videos on YouTube and on Twitter and other things. So anyway, just stay with me. And if you're subscribed and you have that notification bell clicked on YouTube, like anytime I go live or post a video or have a post, make sure you just get those updates. Cool. All right. Let's see here. Okay. Let's see where we're at. I think we're getting close to that pin at still 65. Dadgummit. We're right at 45. I kind of wanted to stay there, but I just need more time. That butterfly spread just needs time. These final, and everyone knows this, if we talked about it in class or some of my alerts and services, we're talking about butterfly spreads, either broken wing or standard like butterfly spreads with debits. The magic always happens in the final 30 minutes, 20 minutes, 10 minutes of expiration. If I'm anywhere near, let's say, realistically, it's like between 68.49 and 68.41. If I'm in that window, I'm going to make more money on that trade as a winner than I would on the max risk of $40 on the other trade. So that is my preference. Now, if it slips up to 55 or 60, well, I needed to go up to 61 to 69. So, I mean, realistically, it's like between 41 and 41 and 49. That'd be nice. That would allow me to grab maybe $100 out of that trade. I'm only risking 40 on the other one. Or if it is closer to 45, that's my, max profit of like $400. So we will see. This is going to be something I take into the close here, maybe the final like 15, 10 or 15 minutes. All right, Mike, I'm going to take a look at silver for you. I actually just put in some dollar cost average levels on silver. I'm still holding shares long. So what I've done on silver is I did take profit on silver and gold this year. I've been riding, SLV and GLD all, I'm trying to think, for the last like 24 plus months, 36 plus months. I did not expect silver to go 100+% this year. If anything, I was like, yeah, maybe Bitcoin has a stellar year with it being pro Bitcoin and everything else. But Bitcoin has been a big disappointment, although it is looking a little bit better. I'm not getting super stoked about Bitcoin yet, just because of this is a flush down correction. We could have one more push, to the same lows or even divergent lows, and then I'd be looking for a reversal pattern. So I still have, plenty of faith and confidence in Bitcoin. Don't forget about that. But as far as how this price action plays out, this little correction, might end up giving us a double bottom or some type of sharp, divergent low, and then it rips back up and we start breaking the trend line to the upside. So, if it does just come back up, and I've mentioned this kind of key level, if we get back, 100K is a big milestone as far as like the bulls kind of getting back and undoing some of the damage. But to me, if the bulls are going to take the structure over again, we have to see some type of spike back to like 107 or 110. So if we're on the right side of this trend line, breaking highs, pulling back, that is a better sign of the bulls regaining structure. Okay. But if it's just down, pause, and then another flush down, you know, don't call the bottom here. There's a lot of support back in the 70s. But if I'm not mistaken, I think like right now current mining costs are just over 90K. So even that push down to like, 80 grand was kind of a nasty spike, and that probably made people sweat a little bit. Okay. But I mean, the narrative hasn't changed a ton. It's still pretty pro crypto out there. It's pro Bitcoin, I should say, versus altcoins and some of the stuff that's doing bad with current like market cap. But Bitcoin is still. I mean, to me, it's like if you want to be in the crypto space, Bitcoin is kind of like the S&P of the crypto space, which I don't mind. And with it being so financialized now, and it's in BlackRock, it's in Fidelity, it's in JP Morgan, it's in all these major players in the investment world. I think that hopefully what we are going to see is, even though it may not produce hundreds of percent upside gains, it might also just be a steady, like, 20% annualized, 25% annualized. Like that wouldn't be terrible. If our peak drawdowns, peak to trough drawdowns are 30 to 40%, but our upsides could be 20, 30%, that's still a better, again, higher volatility, yes, but like a better performance than what you're getting traditionally with like the S&P at, 8, plus 8%, plus 10% of the upside, and 13 to 15% drawdowns. So remains to be seen. But silver, on the other hand, just crushing it. Here's gold. I still stand by my technicals on gold. If we get to these all-time highs in gold, I still think that this is a pause zone. I'm still waiting to see how many bars it takes to hit this 200-day moving average. We've got to be like 550 now. The longest stretch was back in 2009, 2011. We had over 600 bars before it came crashing back down to the 200-day moving average. So let's do this. Last time would have been October 2023, so over 2 years ago, and we are now sitting around 553 bars. So I'm just saying that because this is why I'm not necessarily throwing in positions to be bullish on gold, but rather waiting for pullbacks. I still think we can pull back into these moving averages. I think we can pull back and find maybe this low here from the correction. It wouldn't be a huge surprise, and I've talked about this before. Do we hit the highs and then fall back down? Is this a range on gold? Right? Is this a double top and we end up drawing down further before you find a bottom, and then the bigger picture, trough this out and then look long-term bullish on gold? Either way, I'm still bullish on gold. It's just I don't want to put all of my investment at these tops when I think we can have, potentially a 10, 15, 20% pullback on gold. Charts don't look like silver and stay like that. And so, I mean, gold is different, but I will show you, gold has at least paused. Silver is ripped to new highs. Here's silver. Okay. I mean, we're just having this massive surge. And look, if silver ends up going like this, straight up to $70, it's probably going to come back down. If it goes up to $100, it's probably going to come back down. So I am still going to be patient. It's like when you take off a profit after a 2 to 3 year core position that I've been running like a campaign trade, I'm not excited about jumping right back in. I mean, I had thousands of shares of SLV, and now I'm back in, like, starting my positions over at like a couple hundred shares. And I'm okay building it back up again over time. Okay. No, it wasn't, Ed, because it's five wide and it's an okay trade. It was like I threw it in this afternoon, just to see. So it's not. If I'd posted it, would have been like a double ups or something. We talked about some stickier levels this morning about that positive negative gamma, but I didn't make it for an official service. I'm just throwing a couple bucks at it. So no, not an official trade for a group because it's a five wide is not great. That's really tight. That's super sensitive at the end of the day. The reality is I might get lucky on the trade, and I'll admit it. Like if I end up closing that thing out for like $100 some, I might get lucky. Okay. Like this trade here that looks more promising, this is up $70 and the loser's down max profit of 40. Or I'm sorry, max risk of 40. So if this gain grows to, I mean, this potentially, if close to 68.45, could be up to $400 of profit. Okay. Now, as I do this until the close for the next 35 minutes, I don't know if I'm not going to be able to close it at $435. It's going to have to literally pin perfectly and cash settle at 68.45, which is very difficult to do. So, like I said, if it's within 68.41 to 68.49, that little profit trap for me offers at least a few $100 of a profit trap. And then the perfect price would be a cash settle close at 68.45. So, probably in the last like 15 minutes of trading, 10 minutes of trading, even within the last 5 minutes of trading, I might just try to enjoy those like that final push into the butterfly where it looks something like this. If the final butterfly is starting to fill up like that, and my profit is finally, probably looks like this right now. And even in the final, 30 minutes or the final 10 minutes, it's able to look like this. And the final like 1 minute, it's able to look like this. And then it cash settles and that's how it looks at the very end. That's my P&L for my risk graph. Right. Okay. So silver. So Mike, I'm going to ask you, what are you doing on silver? I mean, I do have a couple positions in. I've got some dollar cost averaging levels. Let me show you here. So silver, we've got a nice little run on our bull call spread. I know that's out of ways. We did some pretty decent contracts here. This should be a risk of, let's see here. So I can make 335 times 300. So I can make about $1,000. So 335 times 3. So make $1,000 on the trade. It's up $200 right now. Not bad. There's still a lot of time in the trade. We just need to stay above $50. If this gets closer to like $500 profit and there's lots of time left in the trade, I might just take it and move on. Okay. So that's one trade we did for Project Options Edge. I also put in a core position for Project Options Edge to start getting back into this trade. So here is an example, SLV. I bought some more shares. I do have a collar trade. And right now, the put side is worthless. The call side is starting to get squeezed, but I own the shares at 43. I've got a covered call in here. The collar trade was worth an extra 35 cents. I'll tell you exactly my break even. So I bought the shares at 43.78 minus a break even of 35, and I get it called away at $50. Okay. So 42.93 is my break even. I get it called away at $50. I make 707. Like it's just an income trade. Now, what I have running in the background is I have a bunch of working orders because I'm still wanting to get levels to buy. Now, these might shift a little bit. Like I have a 36, 34, 32, and 28.50. I just put on fresh trades today. $50. I'm looking to get back in at $50 in SLV, $42.05, $35.05. I do the 5 cents because in case we tap like the exact zeros that I get, like the ask is covered and I can get filled. Okay. So 50, 42, and 35, I'm looking at dollar cost averaging back into SLV. So I'm going to start, and these are building back up. Like this would be 27 and 29 and 31 and 35 shares. So that adds up to 60, about 120 shares on top of the 100 that I have. So a couple hundred shares, right? And I'll eventually build this up to hopefully, maybe 500 shares when I'm just scaling into it, adding into it. And I'll keep it as a percentage allocation. Okay. I did get some silver exposure here with CEF. This one is gold and silver. This is now up year to date, $1,700, $300 right now, just buying some shares. That was on that first little dip and correction we had on gold and silver. So CEF allowed me to buy back in for what I buy this at, $37, about $1,500. So I've got some exposure, but I'm also like, I mean, the crazy part is I don't know if silver becomes, absolutely parabolic and like mania strikes silver, or if it just goes up and crashes. And both can happen. I mean, we could clearly run up an aggressive like 70, 75, $80. And here's what's going to happen. What's so dumb is everyone that was selling their silver because it was so high is now clamoring to get back into it. And if that drives the prices even higher, the dumb part is people are buying just like absolute crazy highs. Okay. And that's fine because I do think that what this is showing us is bigger picture. We're breaking key technical levels. Like all-time highs were about $47 on silver. That was the 2011 high. And that was a 2011 and 1980. Those were the highs, right? Like right around $50. So this is our 2011 high. You go all the way back here to, I got a weekly chart. Let's go back to 1980. Look at this. So now that we're in like open space, great. Like let's just and I kind of roughly calculated this, but if we do the low to high, okay, and we match that over here, there's a low to high. Let's just take this and plot symmetry, right? Let's say that this is a breakout. Okay, and this market's able to break out. Well, why do you think I have this blue line way up here at $92? It's a swing and it's symmetry based on this crazy range that we've seen for the last 40 years. So if it's an uncharted territory, yeah, I mean, I think silver can go to $90. It could also go higher. But as far as like my next trade on silver, it's like, can I position for an investment that allows me to stay in here, not over risk, not over leverage, not over commit, but do a percentage allocation and plan on the target for me to be around $90. Okay. Which right now we're trading at a 60 spot price. So if we go 60 to $90, I mean, it's not 100% upside, but I'll still take it. I'll take a 50% gain on silver. It's not bad, right? But I think it's going to come with some type of pullback. Now, if we hit 90 first, okay, but we're probably going to crash, I would think like 30, 40, 50% before we can kind of get back into it. And, and I just think it's funny, like people have gotten so excited about gold and silver, and there's still risk in this trade, and you might spend years and years and years watching this do absolutely nothing. So I just think you need to set proper expectations with what the market has done when we have this crazy rally on silver. Okay. It spent almost a decade. In fact, well, I mean, I guess it did. It's like this is 2011. Okay. And we just got back to the highs in 2025. So we spent 14 years dollar cost averaging. And this is if you're super committed to silver. And then you're finally getting the payout now. Right? I mean, that's almost as awesome as being in the Nikkei since 1989 and just getting an all-time high in 2024. That's not fun, right? So what I'm saying is the expectations of if this thing runs like crazy, look, it could still pull back this far. It could still pull back to this bullish trend line. It could have ugly, nasty pullbacks. And so what I don't want to do is be overcommitted and overweight and heavy on silver when it's, potentially going to have like this broken chart look where it's like it's straight up. Everyone's so excited. It just keeps getting squeezed. And then it just comes crashing back down. I don't want to be left holding at the top, So like Mike, you said a collar trade. Sure. Collar trade's great. But a collar trade, what you're going to have to do is you're going to have to give up the upside. Okay. You have downside protection. And do I think downside happens immediately? Not necessarily. If I look at this chart right now, I mean, it does look squeezable. I will say that. So I think silver could just continue to surprise the upside, and then people chase, and there's just ETF flows, and it's just pumping higher, right? I'm pretty sure the ETF has outperformed silver spot price. I think. Let me double check that. So let's go yearly chart on XAG. So about 108% on XAG. If I go to silver, SLV, 106. So it's about the same. I thought the ETF was going to get pumped a little bit higher, but that is okay. Right. So anyway, I like the trade. I like bullish. I'm just trying to be patient. I'm trying to use my, moving averages for a nice, healthy bull market. Do we get a retracement? Great. If we don't, I'm not chasing these highs. I've got spreads. I've got puts. I've got ratios, whatever. I've got all sorts of stuff to, start establishing a position again. But if I were to buy in right now at $60, okay, if I bought in SLV at, we'll say SLV at $55, I buy it right here. and then price falls to $50. It's like, I don't want that to be, oh my God, it's down. I hate this trade. I shouldn't have got in. I mean, it's down 10%. So yeah, I'm not excited about tossing a bunch of money at the top. I would say if I add some dollar allocations here, it pulls back 10%, I add more. It pulls back another 10%, I add more. I'll pull back another 10%, I add more. Now I've covered myself over the course of a 30% pullback, and I only have a position that's, maybe based at like a 10 to 15% drawdown. So I give myself some wiggle room. I'm not overcommitted, and then I can start adding more as I think we have a trough and a bottom we can start going higher with. Make sense? All right. So that's my thoughts on silver. Gold had a similar length of time consolidating in 2012, 2023. Yep. So you're looking at, it's a decade plus, and look, everyone that's trading. What just happened? Hang on. I think I just got a trade filled for son of a biscuit. All right. Well, that's annoying. Let me see if this one I'll take this one off. This one filled for a little $50 risk. 450. Let me see if I can grab this one for a quick break even. Well, maybe I get lucky here. I don't know. I'll keep it in there. I'll keep it. So now my pin prices got a 45, a 55, and a 65 to kind of fill in the gaps. The trade I was looking at earlier was like a 35 pin, and it was 10 wide, but it was going to be like 125, 150 bucks. I'm like, well, if I'm going to go tight butterflies, I want to tighten it up a little bit. So we'll see. It's 334. Don't sell off and make lows on the day, you turd. Get back to 45. I'm looking at this right here on my dynamic trend. I want to see if price will. So this is where we open today, right here. Overall quiet day. Okay, price action wise, I mean, we're pretty much right where we started at the open today. I'd like to see if price can come maybe back up into that 45 zone. Let me just assess. So this one is up 70. This one's down 9. This one's down. This is max risk of 40. So net, it's like I have profit on the day for these three trades. I'm just trying to figure out, is it going to be good enough to hold into the close or hold into the last few minutes and see if I can get one of those really nice profit traps kind of spot on. So we'll see. Hopefully we hang out here around 45. I'm curious how expensive it is if I threw in another one. If I went 35, 40. So now I'm getting a little crazy here, but I will see if maybe 45. All I need is one to pay me in this little window. I'm going to see if I can get this one to work. Take a look at my price really quickly. Just got filled. All right, so I've got this thing surrounded now. All right, this is going to make for an interesting close. If price is somewhere in here, if it's somewhere in here into the close, I have 4 potential profit traps. I have a 35, I have a 45, I have a 55, and I have a 65. So if they're anywhere near this within like $1 or $2, I have enough to cover all the risk in these trades and get a net profit of a couple $100. So could be interesting. Trying to make things exciting, I guess, right? So let's go iron fly right here. And then I will track these into the close. And the reason I didn't make this a group trade or a service trade is because this is not fun to manage. I mean, you're taking 4 trades in the final few minutes, and it's all depending on where this market's going to be in the final, 10 minutes or 5 minutes or the final close. I could be right on one of them. I could be wrong on the others. I could literally be wrong on all 4 of them. So, I mean, my max risk would be 55, 65, 50, and 40. So what's my max risk on the day? 55, 65, 50, and 40. So my max is 210. If I have one winner, every winner has an opportunity for over $400. So if I get one that's pretty darn good at the close and pretty spot on, I could end up making, maybe $200 on the day, which is cool. I'm good with that. This is manageable risk. I take more risk than this every single day in daily profit play. So, but I'm just looking to see if, maybe at the end with prices being somewhat chill today to close out, hopefully we just stick around that 45 zone. All right. So yeah, gives me something to do here in the next 20 minutes. All right, what else? Gold, yeah, the similar upside. I know. I'm just saying, watch that 200-day moving average. I just can't be super bullish on gold. Look, I am bullish on gold, but I can't be adding at these levels. It's like I'm just going to wait and wait and wait because gold right now on the daily chart, we still have a decent percentage. Okay, we're still like 15% away from the 200-day moving average, right? And price action wise, I mean, I could see this playing out a couple different ways. I could see price going right back up to the highs and then hitting these lows and allowing all these moving averages to catch up, and that becomes a bottom. I could see price also going higher, pulling back this way, setting up a bear pattern, finding a bottom, and then you get long that way. Like either way, it's like I will pay attention to this because I want to figure out where can I buy more gold? Anywhere. But I want lower prices. Where can I buy more silver? Anywhere. I just want lower prices. So dollar cost averaging on assets, on two assets that I think will continue to go higher. It's just, I don't think this is going to be instant gratification. I think if you're lucky, they both just run like crazy. But I don't have big positions at all-time highs. Okay. Bitcoin's had a nice little recovery. Like I said, MicroStrategy back to 190. Was anybody in? I did a build a trade last week with Nate Tucci and Kane Shea. Did anybody take that build a trade with me? Do I have anybody that's in that? So I did a trade on MSTR last week, and right now I have a $2.33 credit on that thing, and it's out to January. I'm probably not going to hold it all the way to expiration, but it's up $100 right now. I don't mind it. And we have FOMC tomorrow. This might be a pretty like safe trade to take off. Because I'd like to think that Bitcoin is going to carve out a low and work its way higher. If we end the year on a positive note, Bitcoin probably goes higher, which drags MicroStrategy with it. But I was in for 230. It's up $100. Not a bad trade just to take it off. Okay, Larry says a minute. Yeah. I like the trade. I'm up 44%. Well, let me just look at the chart, shall we? Let's look at the chart. MSTR. Now, I'm a little proud of myself here. I will pat myself on the back for this analysis because once we had this swing, what I did on MicroStrategy was high, low, lower high, and I measured out the lower low. There is my, and this was months before this started to decline. I looked at a 150 ABCD symmetry bottom, and it was like to the dollar. Okay. Now, did I buy more shares of MicroStrategy at 150? No. But what I did is I had some ratio spreads and puts that are down like the 140s, 130s, 120s, 100s. And those are all looking pretty good to finish out the year if this is going to be a decent bottom. Okay. So that trade that I took on for build a trade has a profit trap of $500. So if it's between 180 and 141, which is a pretty decent net, I would say. So if it's less than 180 and it's greater than 140, I have up to a $500 profit trap in that window in addition to my $230 winner. So I could make I could make $733 on the trade if I'm going to wait a little bit longer. Okay. But we'll see. I'll give this one like another, maybe a couple weeks, get into the end of the year, see if Bitcoin is going to continue to rally. And then this trade might be good for nothing more than $2.33, which is also fine. So I told myself if I'm up like $195 to $200 out of the max 233, I'll just take the profit. How would you calculate the ABCD pattern? Symmetry, my dear Watson. So just take the high and low. Okay. Take this high. I'll just mark it on the chart with a drawing tool. So take this high, take this low, and I'll just drag the box over. So high to low, which is right here. Okay. And then go from this lower high to lower low. Did the market bottom right there? Yep. Pretty darn close. So this low was 155 and my box low is around 150 and change. Pretty good. So, technicals work. That's what happens when you've been in the markets for 20,000 hours. You maybe figure out a couple things or you see a couple things happen. You're like, okay, this might work. Symmetry has been one of my biggest friends ever. Especially coming in currency trading and trading, swings and impulsive waves and things like that. Like I'm not a huge Elliott wave trader because if you start asking me to put like little, Roman numerals and little lowercase versus uppercase levels, you lose me already. But if it's simple like 5-wave move, 3-wave counts, impulse versus corrective, whatever, like that's easy to understand, and at least I can wrap my head around that. So typically, when you have a swing, if you have a swing and there's a big low to a big high, we typically have like an A B C correction that finds some type of equilibrium before the market continues. Now that's textbook stuff. Okay, there's always nuances. So when you go 1, 2, 3, 4, 5, A B C correction, that usually comes back in this area. So wave 1, okay, pull back wave 2, push wave 3, pull back wave 4, finish wave 5. Then you have an A, B, C correction. I guess that B should be down here. So A, B is the pullback, C is the push. And then it comes back to either the top of wave 4, which is the start of this, or the bottom here. And so in this area, if the trend is going to resume, you look for this to be the trend resumption. Okay. That's about as complex as I want to make Elliott wave. And I've been trading that way for years, but it's not like all I look for, because if there's crazy nuances and all of a sudden we spend time inside this wave going sideways for several counts, I get lost in that stuff. So it's like, this is a 1, this is a 2. I'm still looking for a impulse wave 3, right? But ABCD, that's just symmetry, man. So anytime I see a push in the market, we get a push, we get a pullback, I get a push. I measure symmetry. If I go into, let me see if I can find this bad boy. This is an oldie but a goodie. Let me see if I can find this. This goes all the way back to Survival Trader. Let me see. Actually, you know what? It's in my Discord. Give me a second. In my Discord, oldie but a goodie. Let's go back to my Discord channel. Okay. Legacy education. There we go. This guy. So Survival Trader, this is a pattern-based course that I built out many, many years ago, probably, almost 10 years ago. Wow. This to me would be the fastest way to show traders how to get in for market symmetry, market mapping, projecting pattern levels, measuring things out. I build out, support and resistance, trend lines, the way that I personally like to use them. I've had really, really good feedback on this over the years, where a couple of traders have done extremely well by, again, it's just things that I say as I'm doing all these live sessions. But, over the time, I've said, if you can understand support and resistance and trend lines, you can be a really effective trader. And it's true. And it still holds true. So these are like timeless lessons. And these are things that always work. There's always structure in the market. Support resistance work. Trend lines work. Market mapping works, right? And in the like, always zoom out. Go to a higher time frame, zoom out, look at the big picture, and then you can narrow the focus and get down to something that's more tradable and actionable if you want to go for the the risk reward type stuff in the smaller time frames. But big pictures, shapes and formations. I talk about all these different patterns that are very common in every market, but I traded them a lot in Forex. This is how I ran a currency fund for over a decade. That would be the most boring 12-month cycle, but it'd be like 0 profit, 0 profit, 0 profit, 15%, 1%, 0%, 0%, 10%. Like, I would just build pattern trades, and when they paid me, I would just sit and just ride these profits and ride these out for some pretty big wins. And the same thing could be done with trading stocks. I mean, obviously the bullish bias in the stock market, the bullish bias that tends to win out over the long run, versus a currency market that could still be sideways for decades. But these patterns are still very possible, and they just tend to be more inefficient when it comes to trading them in the stock market. You tend to get more upside, you tend to get more inefficiency, you get less pullbacks, but it's like you can still spot bottoming patterns. Right, you can still spot, a cup and handle on a reversal pattern. You can still spot a crown or inverse head and shoulders. You can still spot flag patterns. So anyway, fun course. I built this a lot of years ago. Honestly, it's a ton of content. I mean, I think every video is these timelines. Like, I don't do videos like this anymore. But I put like a lot of time and energy and passion into this course, because it works. And so I'm like, look, if I'm going to teach somebody how everyone's asking me, like, how do you do technical analysis? How do you trade currencies? This is it. And I did this for years. So, and you can see these patterns on a bunch of time frames. We're talking like, probably close to 20 hours of content. And then I also have a conference here. This is back in the day when I was doing some work with Rob Booker. You might have heard of him. He was a popular currency trader for all these years, and he's still out there. Rob's been all over the place. He still is. But we did a conference. I think it was in Houston. I did one in Miami and Houston. We did one in Texas, or that was Houston. We did one in Arizona as well. So anyway, it was a lot of fun. Rob's always been a good friend of mine, and we had a lot of fun working together. But that's a live session that comes with it, a bonus. So anyway, that's a tangent, but it's like, if anybody wants this legacy course, it's in my Discord. You can have it, right? So check it out if you're interested. It's 20 hours. If I've got some diehard educational traders out there that want to dive in and jump in at 1.25 speed or 1.5 speed, chip away at this stuff, it would be like, cover the education, and you've got literally like lessons that I still use to this day and the way I see the market. So, the question was, how do you calculate symmetry? It's in market mapping. It is market mapping. And then you got all these patterns to trade that gives you a way to see a pattern, trade a pattern, position for it. So when the market goes down, up, and it pulls back, there's two ways to trade this. You can start positioning at the high or low. You can start positioning at the breakout, and you can measure symmetry. You can measure symmetry. So profit 1, profit 2. There's so much money to be made in those trades, everybody. If you just, and it doesn't have to be perfect, but it's like, if you start positioning, let's put some green checks here. If you start positioning with, okay, I'm gonna buy a little bit here. I'm gonna buy a little. Let me make this bigger. You can buy a little bit, here, buy a little bit here. Maybe wait for a smaller pattern to emerge. Buy it here. Have the stacking order up here. And then the more aggressive trades take profit. The better trades that have been built on this dip take the profit up here. The asymmetry, it's like type of reward to risk, is favorable. And if it's something that you want to own, yeah, I want to hang on to this. So anyway, it's fun. It's helped me a lot over the years. So if interested, there it is. Cool. All right. MicroStrategy 190. That'll be fun. We're coming into the final stretch here. It's 350. All right. What do we got? So let's go. SPX, final 10 minutes. How are these trades looking? So this trade is up $100. This one's up 8. This one's down. This one's max loss is 40. This one's up 100. So in a way, I kind of need to pin this thing like pretty perfectly, to be honest. I'm pretty dumb for taking 4 trades at the end of the day, each one having about $50 risk, because that means I need a winner to pay me $150, right? I need a winner to at least pay me $150 to make this worth my time. Now, where it is right now, if it cash settles, I'm going to make about $300 to $400. That covers my, my entry costs, and it covers my risk, and maybe I can carve out a couple bucks here. If I take the money now, I'm up 120. I'm break even. I lose 55 and I lose 40. I'd make 30 to 35 bucks on the day. It's better than losing, but I'm gonna stick this out for a few more minutes. Come on, baby. Don't do anything silly here. What's this? Let me see what my robot was doing. I just finished this robot here. Where are you? There it is. Silky smooth, baby. Good stuff. Okay. So how many trades? 1.75 profit factor, minimum drawdown. We're talking about this is on a 20K account. Drawdown was at one point about $4,000. That was built on, I don't know, probably like a 500 to 1,000 pip area, but pretty nice to get. What does that return? About 22.5%. Not bad. Very scalable. A lot of, I don't know. It's been a fun robot to trade all these years. All right, final couple minutes. 352. Yep, it's Survival Trader, just so you know. You got the link in the chat there, but Survival Trader. I ran a service for a while, survival-trader.com. I've since retired that service, but it was fun. It's fun while it lasted. I did a little Rhino Trader action, some Survival Trader. Those were fun. I had a blast. I had a lot of creative freedom, but it's a whole thing. So I just like trading. I like trading. I like talking about it. It's fun to teach it, and I'm pretty good at it. So I've been in this space for a long time. Traders have asked a lot of questions, helped a lot of traders. I do a lot of one-on-one sessions. That's fun. So it's fun to do. I mean, I will say this. I mean, I enjoy teaching golf. I do that, once or twice a week just for fun to keep my PGA card and keep in the good graces of the PGA of America. But I will say that, there's such like an emotional piece that comes with people in trading, that doing like one-on-ones or small workshops with a group of 1 or group of 5 or group of 10. It's like when you can teach somebody how to fish and be a better trader and make money in the long run. I mean, I think that's a huge lift for a lot of people. So I do have a lot of enjoyment and fulfillment out of just doing one-on-one sessions or private workshops with traders too. So, all right, let's see. Do I have it? Okay, I've got this to the downside. So I've got 35. All right, prices are jumping around here. Either a 35 or a 45 would be pretty sweet at this point. Live market feed is 42. So here's what I'm watching on my other screen right now. If we get sticky around 45, we're in the final few minutes. I might try to close this bad boy up. 435. Let's see if I can get this one up to like $250 to $300 and I can close it. I'm going to keep a close eye on this one to close. Well, I'll just keep an eye on this one. So 109, up 11, down. All right. This is the one I want to watch the most. Oh, crap. Just like that. $100 goes to 50. Don't turn to a loss, dude. So 385. Let's see. All right, getting a little exciting here at the end. Are we just dumping into the close? I should just kind of embrace this risk, huh? All right, we're going to ride this thing out for 5 minutes. So I've got $90 of profit, and then I'm down about max risk would be 110. So I should not just take the profit. I really want to see if I can pin one to get a full winner or close enough. If I get, $250, $300, I can carve out a net winner on the day. Let's see. Final few minutes, right around that 68.45. Come on, baby. 40 is not the number that I want. 40 is right in between my strikes. 40 is crap. I need like a 41 to 49, or I need a 39 to 31. So one of the two. Let's see. Bash, you chatting it up? Cool. All right, we're 41. Looking better on this fly. Now it's going to be pretty quick. Like, I mean, if this thing sticks up to like 42, 3, or 5, this will be a quick winner. Let's see if we can get after it. 97. Come on, baby. Give me like a 43 or 44 close today. We're talking 68.43, 68.44. That'd be pretty nice. Otherwise, drop to 35. All right. Come on. So 35. So 39 to 31 is a profit trap. 49 to 41 is a profit trap. Gamma-wise, we're right in here at the final bits. Don't stick to 40, though. Either get to 35, get to 45 in these final few minutes. This one's looking better. Yesterday's pump at the end of the day was at 35. When is it going to be announced? I don't know, honestly. I mean, Powell's term is officially done May of 2026. I think that Kevin Hassett is now in the prediction markets the biggest front runner, but I don't know when it's officially going to be announced or when he takes over. It should be like May or June of 2026. So It could still be some time, but the whole controversy about having this appointed Fed is like basically the Fed's going to be like a shadow Fed, where even though Powell is still the chair right now, he's doing one press conference and the market's like, all right, what's going to be Kevin Hassett? What's his thoughts? So when he goes to the press or when he goes and has some sound bites in the media, that's what the market's going to kind of look at and maybe price in. Is a Kevin Hassett thing? Is it Hassett or Bassett? I think it's Kevin Hassett with an H. All right, 2 minutes. Come on, we're at 39. Do something fun. Get to 35, get to 45. Make it magical. We're at 38. Come on. We could still get more cuts from Jerome Powell. I mean, maybe. It honestly doesn't look like the probabilities are not looking that great for it, though. All right, I'm getting closer on this profit trap. Give me a moment. So we're at 37. Let me see if I can lock in. So that was filled for 450. I'm going to try to lock in. Dang it. It's right back to where it started. Try a buck. Don't go to 40. Don't be at 40. We're down to the final minute. Come on. 38, 39, 40. You freaking turds. Come on. So I'm looking at current number, 40 and change. I want this to be at 41. Damn it. 41. Come on. 41 and change. Get up there. Crap. Well, that was kind of worthless. Well, I tried. This one, max risk 55. Is that it? With fees and everything, 45 at close. If it settled at 40.5, that sucks. So 435, and I'm up 52 cents on that thing. So if I had max profit of 435, I'm going to go 6845 minus 6840.52. 448, yeah, minus 435. So I made a whole 13 bucks after fees. I make $7. The other one, this one's going to be small loss. All right. Well, I took a small loss on the day for that. It was just, and it wasn't a service trade or anything. I just thought maybe I can pin a little price action, but it slipped between, I wanted a 45 sticky zone or I wanted a 35, and that ended up being right in the middle. So I lost a few bucks. I had 7, and then the other risk would be down like 110 bucks today. All right. Forex pairs. Sure, man. Let's do some quick Forex. Forex update. Japanese yen, weakness. Okay. Don't fight the yen. Trade what you see. We're seeing a weaker JPY. To me, this is all in an effort to keep the Nikkei grinding higher. Aussie yen, don't fight this thing. If you're going to sell Aussie yen, do not touch this unless this thing breaks a trend line. Okay. I am bullish on Aussie CAD and holding bullish. If we get to fresh highs or get into my symmetry around 93.50 or so, I'm taking profit on my swing trades. Aussie Swiss looking much, much, much better. Aussie yen, don't fight that until it breaks a trend line, or just stay bullish. I mean, honestly, look left on this chart. I have some concerns that we came all the way back to sweep this high. But if this is a resistance zone, it's going to have to turn like now. If it doesn't, we're going to these highs at 109. Aussie New Zealand, I'm sitting around break even on this trade. I sold at 13.50. I sold at 14.40. Well, I guess I'm upside down a little bit. So there's my 14.40 trade. I need price to get back down below. If I can get this thing to like, if the 13.50 is break even or better, I'm going after these lows around 1300 or possibly this pocket, which is around 1200. Aussie dollar. I think Aussie dollar still looks good to run up to 68, almost 6,900. CAD Swiss. It's about flipping time. I'm bullish on this thing, but even more so if we get a pattern. So if I get a bullish pattern to form and we get something to break on the right hand side of this trend line, this trade to me is at least like a 1, 2, 3, 4, 5 wave move. And I will build. This will be like another one of my kind of classic like survival trade or pattern trades that I can build back up, let it take 6 months, 12 months, whatever I need to, and potentially make a lot of pips. So I thought they were going to possibly hike the yen. I mean, they might. I just don't think it really matters. Honestly, it's like the Japanese yen. The BOJ is going to make a rate decision this month. It's going to be, I think, December 18th. But again, it's like, does it matter? It's like, I don't think they're wanting to intentionally strengthen their currency pair. I know that they're one of the few central banks that's actually raising rates. Everyone's worried about the carry trade unwinding and unraveling, but their yields are still less than 2%. So although it's like making the carry trade negligible, it's still positive swap to like borrow in yen and put it anywhere else. If you borrow in yen and put it in US treasuries, you can still make, after fees and everything, you still make close to like 1.5%, 2%. But yeah, I agree with that, JP. Trickiest of all, it is. It's been my, I call this the widowmaker, the widowmaker of currencies, because if you're on the right side of it, it can be the best thing in the world, and you can go to break even and watch hundreds and hundreds of pips be in profit. If you're on the wrong side of it, you will fight the Japanese yen for thousands of pips, and just you just feel like an idiot. You're like, what am I doing? And here's my test for the yens. If your friend or family or kid or dog can come look at your chart and they can tell you that, are you buying that? Because the trade in the Japanese yen looks like this. Okay. And you're like, well, actually, no, I've been selling this whole way. Don't get to that point. So this is why I keep telling you, either one, don't trade the yen, because it's a wild currency pair that you just have to trade like a stock. When it runs, it freaking goes a long ways. And what happens is you'll have 9 or 10 months of absolutely no decision, right? It's 9 months of this, and then it goes up for 6 straight months, or it goes down for 3 to 6 straight months. It's like when it's ready to go somewhere, it typically goes in a big way, but it is excruciating to try to play this with any type of consistency, because you will spend months and months and months waiting, babysitting, wondering, becoming impatient, and to have the discipline to number one, not force trades on Japanese yen, wait for confirmation. That makes all the difference in the world. So it is a wild slippery currency pair. All right, anyway, back to the CAD Swiss. If we get a bottoming pattern, I'm still looking to trade like a 1, 2, 3 or a 3 to 5 wave move. CAD yen, same thing here. This channel, it's like, okay, we swept these highs. There's some inefficiencies that we're filling right now. As long as we kind of stay on this trajectory, we might be coming back up to 118, 119 again. But if I spot a bear pattern, then yeah, this is kind of putting the top in. This might be a monster. Okay. An emphasis on might be. If this is a high to low, this might be that's not drawn very well because it's a hard color to see. If we have high to low, this is a wave pattern that might turn and go all the way back down. Okay. Am I going to short this? Not without confirmation. Otherwise, get it up here, look for resistance, and that's where I would be either continuing to stay long. Path of least resistance is we're bullish, we're bullish, we're bullish, we're bullish, we're bullish, and we grind higher. Great trade. If this structure turns, then yeah, get short, stop loss above, and see if it wants to come all the way back down. That's my outlook. You just have to watch and confirm. Okay, Swiss yen, has it rolled over yet? No. Great trade, all-time highs. I'd love to short the heck out of this thing. No confirmation. Euro Aussie, a little bit of strength on the Aussie. Euro CAD, a little bit of strength on the CAD. Commodities doing pretty well. Euro Swiss finally bouncing nicely off these equal lows at 92. I'm still long on my Euro Swiss. My profit target is just shy of the 9,700 handle. Euro Pound, just got a robot trader working on that one. Euro Yen, just like Swiss Yen, still going higher. Don't fight this thing. Either be bullish until it breaks or wait for the trend line if you want to short it. Euro New Zealand, commodities getting a little bit stronger. Euro Dollar, still just a big nothing burger. The dollar index is tough to read right now. It's very choppy. Pound Aussie continues to slide lower. Pound CAD, after a nice dump, I'd say this is probably range bound, 8,300 to about 8,800. Pound Swiss, I'm long. I bought this thing at 107. I took a little bit more of a, this trade here is like I bought it around 107. I did hold through the drawdown. I'm back in profit, but I'm trying to get this thing back up to like 109 or 110. Okay. Again, if I get a bottoming pattern, let's say we go here, here. I look at a wave 3 and a wave 5, and I'll hold this thing all the way up to 112. So I'm not going to stop participating in this. I just think got to give it some time. Pound yen, don't fight it. I kind of feel like we need to adjust the trend line now. So like that, we're already back to these 208 highs. There's no sign of this thing shortening yet. Now, if it emerges to be some type of bearish pattern, then yeah, this thing could unravel like crazy. I do think there is some major currency risk in 2026. If you're not careful, if you're not paying attention, there could be some major currency risk coming in 2026. I don't know, but something to watch for. Pound New Zealand, just range trade, 235 back down to like 228. Pound dollar, decent bounce off of this larger trend line. This goes back to like 2023. That's kind of it. I don't really have a good sense of direction on dollar index right now other than watching. If the dollar index is back above 100, then I think that's risk off. If we fall to fresh lows, it's risk on. New Zealand CAD, I bought in near this low. I was looking at this double bottom around 78.50. Start buying in at 79, 78.50. I'm just not filled yet. So 79, 78.50 trying, but I'm trying to get back into this box and try to get back to the highs around 83. So this just goes back up to 83. I'm out for profit. New Zealand Swiss, another strong looking, kind of bottom. Question is it going to be, up here, pull back up again? If that hits symmetry, I'm out with some profit. If it pulls back and goes to wave 5, I'm out with some profit. And if anybody has followed me for the last 2 to 3 years on some of these freaking currency pairs, that is where it's time to take some profit. If we have a 3 or 5 wave move on any of these Swiss pairs that I'm long, Aussie Swiss, CAD Swiss, Euro Swiss, Pound Swiss, New Zealand Swiss, Dollar Swiss, that 3 to 5 wave move, I am taking out my profit. And hopefully that is a fortune. Should be, it's probably going to be close to like a 50% gain. But to be fair, it's taken, 2 to 3 years to get it. But I'm still working on it. New Zealand yen, look left. Could we go up to this level at 92 and change? Maybe. Could we come up to highs again all the way to 98? Maybe. Okay, New Zealand dollar, really strong support if you bought this one around 56, working out pretty well. Dollar CAD. I'm glad this channel broke, to be honest. I hope that this one heads lower. I hope this heads lower into this support, and I look to get long dollar CAD in here. So if it comes down to 34, 33, 3,200, I'll get long dollar CAD. If you're trying to participate in this one, be careful. This is a really nasty zone here. So if it breaks, pulls back, and it stays lower, you could do a swing trade and try to trade it back down. I just don't know if the dollar is going to move that much. I'd rather just trade these massive support levels, massive resistance levels. To me, that's a little easier. Dollar Swiss, promising thing is around the right-hand side of the trend line. I'd like to see if this structure breaks. So either sideways, 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 maybe a bottoming pattern, but I'm looking for that. 3 to 5 waves. Dollar yen, don't fight it. Equal highs at 159, equal highs at 162. Don't fight it. A topping pattern, sure, maybe. But if you're long, long with stop losses, see if the market wants to keep grinding higher. If it does, they're your highs. You've got some reward to risk asymmetry. That's good. You can make bigger gains than risk. If it turns aggressively, get out. Don't fight the yens and be willing to take small losses on them. Okay. All right. EF. What is EF? You want me to check quarterly base load electricity futures? What is EF? All right, let's see what the heat map did today. We had 56 advancing, 41.6 declining. JPM was way down today. This is a little bit concerning. Let's go Goldman Sachs. All right, I take that back. Goldman Sachs up to fresh all-time highs. Why is JP Morgan down? Big drop today. What the hell happened here? See here. Marianne Lake projected expenses $105 billion, surpassing analyst forecasts due to rising cost strategic investments. Let's see. Major crypto exposure may face negative rating changes due to risks like reputational, liquidity, and compliance challenges. Huh. Crypto risks. I mean, are they like up to their eyeballs in crypto? I didn't think they were. We'll see. Oh, I see what you're saying. Edge Finder, got it. So, I mean, maybe a range. Fundamentally, I mean, we're still pretty snowflake strong on JPM. So here, JP Morgan, pretty good. Not terribly expensive for a financial institution at all-time highs. Fair value 366, and we're down now to 300. Now, I don't know what this is going to do. I mean, again, let's say after this rally, we put in a broadening pattern, right? Could this be a high, low, lower, high, lower, low? Of course. And then it pops right back up. Could it be more? Yeah, maybe. If we have a head and shoulders, if this is your neckline, measure, I'd still buy some JP Morgan in the 200s. So, area to position for is either at our support or a measured move. So area 1, area 2 doesn't have to be big. If I'm like, yeah, I want to put, $5,000 into the stock, well, do 2,500 here or do 2,000 here and then do either another 2,500 here or another 3,000 here. And if you want some dry powder, then go all the way back to the Liberation Day lows in 2025 and add another $2,500. Give it time, you'll make money. It's like it's not hard. It's just don't take a huge position. I don't know what this wants to do. If it's going to be sideways, I could see this broadening pattern, right? So nasty sell-off day. It's also very inefficient. I could see this stalling, finding a bottom, working its way back up, filling that inefficiency. But that's kind of the big red that I see today is JP Morgan. Everything else is just mixed. 56 advancing, 41 declining. Tomorrow's Fed Day. So let's see what type of drama we have for Fed Day. Keep an eye on it. All right, cool. Hey, I'm going to be live tomorrow at 1 p.m. Eastern time for the FOMC. I'll be running a session at A1 Trading, and then I think Nick and I will probably hang out and speak a little longer once the news happens at 2 p.m. I'll also be live in the morning. Everyone's welcome to join. Daily profit plan at 9 a.m. Eastern time. You're welcome to join me anytime. All traders welcome. Yes, I trade indexes. Yes, I trade options. It's a morning session. You can join me live every single day. Members are, there's an alert service that I do trades with that goes into members Telegram in my classroom. But as far as like talking the markets, trading strategies, things like that, it's like I just have a live session that you can all come in and join and learn. Cool. So, all right, I'll wrap it up there and come back and join me tomorrow for a couple of sessions. We'll be live FOMC at 2 p.m. tomorrow. I'll be live at 1. Take care.